And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, dividend stackers. Today was one of those days where you really find out if your plan makes sense or if you're just plain gambling. The market got hit, SPY was down, QQQ got smoked, tech sold off hard. Both ULTY and CHPY took a serious hit. ULTY dropped hard, CHPY hurt even more, and I'm not gonna lie, seeing that red does not feel good. But here's the crazy part, even though ULTY fell hard and CHPY fell hard, my overall portfolio actually came out ahead this week. Robinhood is showing my realized options profit at a positive $15 for the week. That all came from option trades I had throughout the week on names like SPY, QQQ, IBIT, and BBAI. Some of those I closed like BBAI, and some of them I opened on SPY, some protective puts for the portfolio. Really a hedge in case ULTY fell. That didn't make the ULTY drop disappear, but they helped offset the damage, and that is exactly why I've been thinking more seriously about using options as a portfolio defense tool instead of just chasing income blindly. Now, let's be clear, this is not financial advice. This is for entertainment purposes only, and I'm just showing you what I am doing with my real portfolio. The biggest reminder here is why I deleveraged. A few weeks ago, I was way more exposed, and I had more income ETFs, more margin pressure, and less flexibility. When everything is green, leverage feels genius, but when ULTY drops hard and CHPY gets crushed, leverage can turn into stress fast. That's why I cut back. I kept the core positions that I actually wanted to build around, ULTY and CHPY. I got rid of some of the extra stuff. I reduced risk, and now on a day like today, I can actually think instead of panic. Looking at ULTY specifically, it closed at $29.84. My share cost basis is $47.26, and my break-even price is $29.55. And that's how I am still up $99.31, or just shy of 1%, even though the unrealized P&L is sitting at negative $5,900, which is a negative 36.86%. That's why those dividends over $6,000, $6,030.25 to be specific, come into play. Starting this month, $134.63 have been paid out, and I did close out last month at $538.76. That means I am more than halfway to the cashback point, and honestly, that changes how I look at the position. The price drop hurts, but the income has been real. The cash flow has been real. The question now is not just, is ULTY red? The question is, can this keep paying long enough for the income to outrun the portfolio decay? And that's the whole game. Now, CHPY, that one hurt to see. I'm not gonna sugarcoat it. CHPY got hit hard because tech and semiconductor names got hit hard, but I still like the concept long-term. And for now, my plan is to continue adding slowly, not aggressively, not emotionally, just slowly. And as you can see, the returns are still positive at a 13.64%, which is $380. That includes the price gain of $252, which is 9.05%, and $128 in dividends, which is a 4.59%. The CHPY there is still doing its job, even though it took a hit of $8.12. That was a negative 9.58% drop in just one day. Now, here's something I've been thinking about, and I want your thoughts in the comments below. Since I've already received over $6,000 in dividends from ULTY, does it make sense to sell half of the position at some point and basically cheat the process? And here's what I mean. If I've already recovered a big chunk of my money through dividends and then I sell part of the position, I reduce my risk. Then whatever shares I keep are almost like house money shares. Obviously, it's not literally free money because there is still an opportunity cost, taxes, and price risk. And psychologically, it would feel like I'm taking chips off the table while still keeping the income machine running. That might be the smarter move eventually, but I'm not rushing it today. Right now, my plan is simple. I want to keep tracking the true gain, not just the share price. I want to keep the margin under control. I want to keep using options carefully to offset some of these big red weeks. And I want to see if ULTY can keep doing what it's already done for me, paying back the capital over time. The scary part is real, but I've also seen what ULTY can do. So for now, I'm staying in the game, but I'm staying in it with less leverage, more caution, and a better plan. Drop a comment and let me know, would you keep letting ULTY pay you, or would you sell half once you recover enough dividends and play with house money? And as always, none of this is financial advice. This is just what I'm doing with my money inside of ULTY. See you next week. ULTY YOLO out.